Okay, thanks everybody for coming. I would like to talk to you about Kaiser Reef. So the story I'd like to get away today, you to walk away with today, is that we're ASX, we're based on the east coast of Australia, and we're a growing company. And in saying that, we have a project in operation that's producing fantastic cash flows and ounces at the moment. That's the Henty Gold Mine. We've got a project that we've been redeveloping, which is the A1 Gold Mine, 160 years of operation, going down below everything that's been there historically. And we've got a fantastic pipeline opportunity in the Union Hill Mine at Maldon as well. I'll talk about that in some more detail. So right now, just under 600 million shares on issue. Sorry, this is bastardised from our RIU presentation, so if you want to download, feel free to grab that one. Share price at the moment, 19 cents. We're a bit over $100 million in terms of market cap, and certainly in a great position for cash. We've just completed the acquisition of the Henty Gold Mine in Tasmania. So some key snapshots from that is it creates us as a multi-asset company with A1 and Henty, 30,000 ounces per annum. Great price there. We've paid about $60 million total in terms of look-through value for that project, $15 million cash, 15 as script, some deferred payments and access to our process plant in Victoria. And that's for an asset that's producing about 125 million a year of revenue and has costs right now of about 75 million. So very healthy margins and payback on that. And at the end of that, we are extremely well capitalised as well, and shouldn't be chasing money for quite some time. So Henty at a glance. So this is now our flagship asset of the company. Kaiser's been changing rapidly over the last 6 months with trying to redevelop A1 and doing this transaction. Last financial year, cash cost nicely under that $3,000 an ounce. We're sitting there with well over $2,000 an ounce margin at the moment. Like I said, currently producing about 25,000 ounces and some upside for that. 9.5 million implied operating cash flow for December. We're certainly doing better than that at the moment. You can extrapolate that to a full year, so very, very robust and healthy. Resources, 450,000 ounces. We've also got resources in Victoria, so we're well over 600 for the company now. In total, there is 150,000 ounces there of reserve. A little bit old, that number. We're due to repeat that, but we've just been replenishing there, so we'll spit that same number out there. 5 years mine life in front of us. Infrastructure, there's $100 million of infrastructure there. There's a 300,000 tonne per annum process plant. It's all undercover. Fantastic facilities. This is a project that was built by Placid Dome and then operated by Barrick after that. So it's been fantastic in terms of what's been put in place there. Huge amount of operational upside, and we've picked up a fantastic team in doing that as well. And we are owner mining across the board, both in Victoria and Tassie, and we plan to stay that way. So just in terms of some of that infrastructure there, you can see the process plant in really good nick up there. No issues expected. Full range of critical spares on site there for that. Underground workshop, most of the work gets done there. West coast of Tassie is pretty cold and not that friendly to be upstairs in a workshop. Underground is definitely the place to be. Sits right next to a hydro power station. This is probably legitimately the greenest gold mine in Australia. I know that's out of favour to say these days, but during the night time we're running on hydro. During the daytime we're running on imported solar and wind from Victoria, and just a great place to be. West coast of Tassie is fantastic in terms of infrastructure and support for mining operations. I mean, this is where Cat's underground mining gear came from with Elphinstone in the first place, and some other great operations around that area. My background, part of my background is at Northern Star, so I was heavily involved in bedding in the assets from Newmont and Barrick and from Sumitomo in Alaska. So the plan when we go through these is exactly the same here. It's number one, optimise the operations. Number two, focus on the costs. And you optimise the operation first because that changes the way the business runs. There's no point doing the costs. Then go build up the reserve and the resource base, and then take the next step and try and ramp up production. And it's not quite a linear process, but basically the plan here at Henty is exactly the same, and we see plenty of upside. There's some really low-hanging fruit in terms of the processing. We can get another 20% through that mill, with basically zero capital, just changing our operating mentality a little bit. You're looking at a site that has 300,000 tonne per annum going through. It's so much a fixed cost site. We can get some more through there. It's fantastic both for ounce production and our cost profile, and will actually let us bring more into reserve. Underground performance, it's been capped right. It's capped right now by the mill. It hasn't been for a long time in the past, but gold price is fantastic. Catalyst did a fantastic job of sorting that operation out, and there is a huge amount of upside there in the underground as well. I think most of what we do there is at least 20% upside. We've got the second twin boom coming back at the end of June. We'll see development numbers ramp up considerably. In terms of what we do for development, ore development and waste development, running the 1600s is fine. We can pick up another 20-30% of productivity out of the stopes, no different to what we're talking about on the process plant. And certainly things like underground trucking we can modify to support that. So there's a real opportunity here to ramp this operation up by about 20% across the board without any significant capital expenditure. Some really good long-term opportunities for the process plant as well. And, you know, I'll talk about the underground positively. I'd like to think we're heading up to sort of 450, 500,000 tonne per annum, and might be a little bit of a different circuit and capital at that stage, but lots of upside. Henty is, sorry, I'm not sure what's quite like that on the screen, but Henty has fantastic upside. So there's 5 years of reserve there. This thing's mined 1.4 million ounces. You can look at that cradle zone over the top. Historically, it's been a bit narrower, that is high grade, has a little bit of extra copper in it, so it's been a little bit ignored, but the opportunity to extend the mine life for another 10 years beyond what we're talking about is there right in front of us. And then off to the south, the left of that previous page, Henty Gold Mine, 1.4 million ounces mined. It's faulted off. There's plenty of smoke on the other side of that fault in terms of both lithology and alteration around what should be the mineralised zone. If we can be successful there, finding the extension of that, I mean, this trend is open all the way down to Mount Lyell. There's mineral occurrences all the way down there, which are in a fantastic position to extend. Our A1 mine, just one slide here. There's 160 years of operation there in the bit that's taken out there in the grey. There's been 40 years of nothing but remnant operations. At the end of last year, we really bit the bullet and spent the money to get down below that. We're effectively developing a brand new mine at the bottom of this. It's run between 800 and 1,000 ounces per vertical metre historically. We see a long and successful future in there. We've got the last little bit of work to do, but suddenly ore development performance is improving every day now. Well supported by our process plant in Victoria. It's about $30 million of installed infrastructure there. Maybe 100 if you actually wanted to permit a process plant with cyanide these days in Victoria, and the timeframes involved in that. As part of the Henty deal, we gave Catalyst an option to have access to 50% of that. They have a great project in Bendigo, and it gives us both a strong pathway forward. And our pathway is super important because we have a mine here that mined 1.7 million ounces from underground at 28 grams per tonne, mined an additional 500,000 ounces on the surface. From an alluvial point of view, you see on the next page, there's some cracking intersections in there already. If this was in WA, which is where I live, this would have been worked over 4 or 5 times by now. In Victoria, it's sitting there. Only a very small amount of it, even from previous development, goes down below 300 metres. There's actually multiple lodes through there. There's a potential for repeats undercover in the geophysics. The first repeat is potentially sitting right under the process plant, but we'll get past that. But just a great opportunity. Like I said, 1.7 million ounces mined at 28 grams per tonne. Everybody, including Kaiser historically, has been cash flow constrained to be able to get out and do something here. I think this is one of the best pipeline assets anybody could possibly ask for as an exploration opportunity, and still sits on granted mining lease and is technically in care and maintenance. That's it. Reasons to invest. Assets in Victoria. Henty acquisition completed. Right now we're at 30,000 ounces per annum production out of existing assets. A1 and Henty we expect to be about 50. Put Maldon into the mix there. I think we can touch 100 in the short term. In a great financial position and very much cash flow positive right now. And I think some pretty good people in the business. Thank you.
Thank you, Brad. With the turmoil in Tasmania, what effect do you think that would have with Kaiser Reef? Do you see any affect should there be a change of government, and what's your relationship like with them?
I actually think Tasmania is the second, if not maybe now getting towards the best jurisdiction in the country to mine. So relationship with regulators there is super good because there's not a huge number of mines in Tasmania. So you get into WA and these days you just go into the pipeline. The department's not allowed to accelerate anything or to deal with anything individually. You struggle to even call up people these days to get things done. Tassie still has very much that personal relationship. So best example I can give right now is our tails dam capacity. So currently permitted is enough tails dam capacity on our footprint just going up to do our current reserve. We've got a bolt onto the side of that we're working through. The regulators have been involved in that. We've got still some work to do in terms of geotech and water. The regulators have been involved in that. They'll do the trip to site. One of the first things I did with Catalyst before we took ownership was have a group call with basically all the regulators in Tasmania and be able to speak to them. I actually think we're in a pretty good position there for regulation in Tasmania.
Any other further questions? Gennady?
Could you comment on your relationship with Catalyst? Because they remain a strategic, holding company, but sort of going forward, more of a partner, I guess.
Yeah, so Catalyst, as part of the transaction, 15 million, 17 million, because we raised a little bit more than we said we would. Catalyst came in terms of script, still sit there as a 20% shareholder, have the option to put somebody on the board. Haven't fully expect them to, but we have a really good working relationship. We've done really well through this transition. Was answering emails back and forth with the commercial guy, was waiting to do this talk. So super good. They have the option to take a 50% stake in our process plant in Victoria. Like I said, gives both of us a pathway forward for development of our mutual projects, and more than happy that we've got a good deal out of that in total. Expectation from Catalyst as a 20% shareholder is that we continue to grow the company. So I guarantee you we'll run into problems if we sit here and do Henty and just do our tick along on our current assets. We'll certainly have a relationship that struggles. James is very aggressive on M&A and growth and sees this as a bit of a sort of footprint in eastern states to do exactly the same. So positive and cooperative and expectation that we get moving.
Thank you, Brad.
Thanks, Brad.